On the 29th of October, the Federal Reserve System of the United States lowered the key rate for the second time in a row by 25 basis points, to 3.75–4%. The available indicators indicate moderate growth in economic activity. Employment growth this year has slowed, and the unemployment rate has increased slightly but remained low until August. More recent data confirm this trend. Inflation has increased since the beginning of the year and remains somewhat high, it is stated in the press release. The results of the meeting matched investors' expectations. The market reaction was insignificant. The Bitcoin chart shows volatility and high trading volumes, but without a fundamental change in the course. At the time of writing, the first cryptocurrency is trading around $111,500, having lost 3% in a day. The price of Ethereum fell below $4,000. Other assets from the top 10 by capitalization also went into the red zone. DAX fell by 1%. The Fear and Greed Index remains neutral at 51.1% over 24 hours, and Doge at 3.7%. In the long term, the Fed aims for an annual inflation rate of 2%. The committee also decided to complete the reduction of the total volume of securities on the 1st of December. The Fed will be ready to adjust monetary policy as necessary in case of risks that may hinder the achievement of goals. Assessments take into account a wide range of information, including data on the labor market, inflationary pressures and inflation expectations, as well as financial and international events, clarified the regulator's representatives. During the press conference, Federal Reserve Chairman Jerome Powell noted that the U.S. economy is currently seriously affected by the government shutdown. Due to it, the publication of a number of important indicators is also delayed. Inflation growth is also facilitated by the trade tariffs of President Donald Trump, Powell added. There is an increase in prices for the affected categories of goods. In addition, in the chairman's opinion, the risks of weakening the labor market are increasing. He called it analyst Axel Adlerger. Allowed for a new Bitcoin rally after the Fed's meeting. Financial markets are entering a decisive week, when the outcome of negotiations between the US and China could determine the direction of the global economy and set an impetus for cryptocurrencies. The anticipation of a Federal Reserve rate cut and the upcoming meeting between Donald Trump and Xi Jinping create conditions under which Bitcoin could strengthen above $120,000. Such a forecast was made by analyst Coin22 in a new review. The two-day negotiations that took place over the weekend ended with preliminary agreements between Washington and Beijing. The US expressed readiness to cancel all tariffs on Chinese imports if the leaders of the countries approved the achieved conditions. China in response agreed to postpone the tightening of rare earth metal exports for a year. Markets perceived this as a signal to ease tension and boost optimism. Investors see the negotiations as the beginning of a turn from confrontation to pragmatic dialogue. However, contradictions remain on key issues. The US continues to pressure China on access to technologies, while Beijing refuses to loosen control over the tech sector. At the same time, Trump seeks to demonstrate foreign policy success ahead of Senate elections, which gives the process a political tint. The geopolitical risk of Taiwan also persists, which could destroy all agreements if the US activates military support for the island. Before the meeting of the US and China leaders, a Federal Reserve meeting will take place. The probability of lowering the key rate has almost reached 100%. The analyst believes that such a step will lead to an increase in global liquidity and enhance interest in risky assets, including cryptocurrencies. Historically, the dynamics of money supply M2 coincide with Bitcoin's movement. When liquidity volume increases, the crypto market receives an impulse for growth. If central banks begin to ease monetary conditions, Bitcoin may first reflect this trend. Gold has fallen below $4,000 per ounce, and investors have begun to massively lock in profits. Funds are shifting to more profitable assets, including digital currencies. The analyst called the fall in gold a sign of a change of era. Bitcoin is becoming a new form of value preservation, where there is no physical storage, insurance, or political risks. Large funds are looking for liquidity and mobility, and digital assets meet these requests. After the October collapse, the Fear and Greed Index rose from 24 to 51 points. Panic has weakened and the market has moved to a stabilization stage. Over the last month, more than $6 and $5 billion in stablecoins have flowed into exchanges, of which $3 and $6 billion went to Binance. The analyst notes that such inflows often foreshadow active purchases. Capital enters platforms during slumps, indicating that major players are preparing for new deals. The Bitcoin rate continues to move without sharp impulses. The market is becoming more mature. Large funds form positions through gradual accumulation, not through short-term surges. The current growth is proceeding according to a stepped scenario, when each correction becomes shorter than the previous one, and support levels increase. This type of movement forms a sustainable bullish trend and lays the foundation for long-term growth. The results of US-China negotiations and the Fed's decision on the rate will determine whether Bitcoin maintains smooth upward movement or the market returns to high volatility. If the parties sign a trade agreement and the rate decreases, liquidity will strengthen, and cryptocurrencies will receive a new impetus for growth. The crypto community is actively discussing the new post by trader XeroXnobler, who called the upcoming week crazy.
He listed a series of supposedly expected events: completion of quantitative tightening on Monday, rate cut by the Fed on Tuesday, printing $1.5 trillion on Wednesday as China deal on Thursday, publication of the S&P 500 report on Friday, and tariff deadline on Saturday. In his words, this should become the start of the largest bullish rally of cryptocurrencies in history. However, many users perceived the publication with irony. However, commentators noted that such a calendar looks embellished. In their opinion, the idea that the Fed could print $1.5 trillion in one day is unrealistic. He called the post peg version of hope and emphasized that such forecasts have no relation to the real economy. Other discussion participants added that with the adoption of the market structure bill, growth could indeed be significant. However, such assumptions remain speculative. At the same time, analysts reminded that such expectations can cause sharp price fluctuations, since the market often prices in these events in advance. Some users clarified the Fed meeting where the rate change will be discussed is actually scheduled for Wednesday, not Tuesday, as the post author claimed. This once again emphasized that part of the statements in the XeroXnobler publication do not correspond to official data. Discussion participants noted that such viral calendars often appear during periods of uncertainty when investors seek reasons for growth. Despite the joking tone, the discussion reflects market sentiments where anticipation of major macroeconomic decisions enhances speculative interest and volatility. In the opinion of experts, even without sensational events, the next week will indeed be important. The market is preparing for the Fed meeting, new economic data, and quarterly reporting of major companies, which may set the tone for the movement of prices of leading crypto assets in the coming weeks.